Hello, Al. Well, welcome to our viewers. Welcome to the Realty Champs team, powered by Fathom Realty, to Tuesday Talk at 10. Today we have Al Rodriguez joining us with Best Life Mortgage. I'm Nicole McNeil-Wyatt, and we're going to just dive on in. How, Al? Glad to have you today. How are you?
Nicole, good morning. I'm blessed and highly favored. I'm excited to be here with your audience because, for those who don't know, not only are you a great human being, but you're a pro realtor and you're actually a mentor, which is kind of how I indirectly met you. You're a mentor to others. So it doesn't surprise me if you've taken the extra step to have our home buying and home selling audience understand, and kind of go through this maze that sometimes we feel ourselves in with the real estate market. So glad to be here.
Awesome. Well, definitely glad to have you, Al, with your years of experience. Thank you for that introduction back, by the way. I love that. And yes, here with the Realty Champs team, we're always looking for ways to educate and uplift our viewers. So thanks again, Al. Glad to have you. Let's start with you sharing a bit about yourself and a little bit about your specialties.
Yeah, absolutely. So first and foremost, being a mortgage lender has been my professional career of choice. If you're listening, you may not understand, but the grain on my top of my head is actually wisdom. It isn't really aging that much, but I've been a loan originator since I was 22 years of age. That's well over 30 years. Settled thousands of transactions personally, and I love what I do. Right? You don't love always every minute of what you do, but I love this profession of what it represents to people. It kind of, I believe, is the biggest financial decision, whether they're buying their first, second home, an investment property, selling it. I just think it's very important that we don't take that lightly, like going to the supermarket and buying a head of lettuce, right? So I think that's number one. And number two, you're right. We do all the traditional loans, FHA, VA, conventional, jumbo, USDA. We do all those, and I believe we do them above average well. However, if I had to call something that I had was a superpower, and that's going into the niches and structuring, sometimes restructuring from other loans that may be in process elsewhere and making the deal work, right? It's not really magic, but it is the 30 plus years of experience. It's understanding guidelines. And I want people to know that, don't just think that maybe because your credit's not perfect or because the situation isn't perfect. There's usually a way to figure something out within reason. And if not, there's at least from Al Rodriguez and his team, a absolutely perfect action plan where you can work towards that in the coming 90 days.
Fantastic. Wonderful. That's so good for our viewers to hear are the different options that could be right there at their fingertips when they use the right professionals, when they have the right professionals in place. Now, Al, we spoke before and you shared quite a bit of experience that you have with self-employed buyers. Can you give us a little bit more information on that?
Well, I'm going to try to not to give you too much, but just enough, right? Because I'm really excited about this niche. And let me tell you, let me quantify first. What's a self-employed person? So, you could be the person that has a retail shop, a small factory, a mechanic bay, but it could be really A to Z. It could be those 1099 people that are truck drivers, sales consultants. You work from home in a myriad of things, from consulting to, doing different things. But basically, you're independent. You're either making commission, 1099, you're filing, ideally a Schedule C. And again, you can be a small to medium-sized person, small being one person, to a medium-sized business. And why do I love this? And this is the only mean thing you're going to help me hear me say, Nicole. It's not really mean, but it is the truth. And it is, most self-employed people think they can go down to their local bank or their big retail lender and get a loan. And they're not set up for that. They're not bad guys, but they're not set up for out of the box thinking. They're they got to look at your tax returns. They've got to make sure that you qualify. And here's the oxymoron to this is when you're self-employed, you're a go-getter, you're a driver, you're working hard. But you know what? We've got to avail ourselves legally of all the tax benefits and write-offs that we can have. So when you go to the bank, they say, Mr. Jones, I know you say you make $10,000 a month, but by the time you're done with your write-offs, you made $27,000 last year. So you're not buying the $600,000 home. And I get it. And so where we come in, where we step in, Nicole, is we look at alternate documentation. We look at cash flow. Does this make sense? So yes, do I want tax returns? Ideally, I do, but I'll look at other documentation. Do you have a CPA? Have you been in business 2 years? Well, let's maybe get a CPA letter. Do you just get 1099s? Well, no problem. Give me your 2 years 1099s. I'll run a formula that I'm allowed to do to kind of automatically deduct for expenses, and that gives you a better ratio typically than filing tax returns. And of course, a very simple way to do it is bank statements. If we see that you have cash flow, and again, I'm not here to judge what people are reporting on their tax returns or not. That's not my business. My business to get structured and closed on time. So I might ask you for bank statements. You might say, Al, how many? Well, typically 12 months is the answer. Could be as high as 24 months. I've never done one that had to merit that much. And believe it or not, we actually have programs with as little as 3 months bank statements. So the idea here, as you said earlier, they've got to reach out to you, Nicole. We've got to have a conversation, right? An exploratory one. You don't even have to worry about having to make an offer today. You just need to get your financing done. And so I love, by the way, I've been self-employed since I'm 22 years of age. So I know what it's like to be on commission, 1099, filing a Schedule C, and when I'm not a lender, guess what? I've been a homeowner all my life. I've qualified under these loans. So you can't get more expertise than that. But really, it is an interesting thing. Now, by the way, there's different down payments. We have lower down payments in the market available than ever before. I find that a self-employed person, although they don't have to be a first-time buyer, I often see that it's someone who already has a home. They've had some success the last couple of years, and they're ready to move up. But that's where they're saying, oh, but our tax returns don't work. Well, no worries. We'll look at that alternate documentation to ensure that we can structure your financing. And by the way, we don't have enough time today. Do you have to have an 800 credit score? No, not at all. You have to have some decent credit, right? So I'm just going to keep it real. You can't have a 500 credit score and expect a low down payment on these non or low documented loans. But you don't need perfect credit by any stretch of the imagination. I'd say most people have the credit needed for these type of programs.
Fantastic. Thank you, Al. So if I hear you right, a self-employed person has options. Don't get discouraged if you're going to your local bank and they may not be able to fit you into any of their products. Know that there's other options out there. And earlier you mentioned about the credit score for self-employment. If it is not quite where we need it to be, Al, do you have some sort of program in place to help get it there?
What a great question. Thank you for saying that. Absolutely. I have a right-hand person, my go-to person that is trusted. And listen, I don't want to be cynical. You got to be careful who you're paying money to or who's helping you. If it's something simple, I charge you a fee. We're going to just work on stimulating your credit. We might need to add some trade lines. I may give you some professional advice and we can get you, that credit score. Maybe you're just short 20, 30 points. Let's get you there. Number one. If it's more severe, then I have my right-hand go-to person that I've trusted, and I've seen her do miracles in about 90 to 120 days. So in a week, it doesn't. But in about 90 days, you have something viable where we've taken people who are totally not financeable, including with the myriad of options I have, to absolutely being a homeowner in a very short period of time. So that takes a little patience. We'll be with you, as Nicole will be with you. And so we'll just kind of, groom you to make you buyer ready, right? So it's okay. We want to consult with you. So absolutely. Very nominal cost on that latter one, by the way. It's nothing that is not achievable. It's even if I could do it myself, I wouldn't do it myself. It's just so easy to have a professional do it.
Okay, wonderful. Well, thank you so much. Now I'm going to dive into that all-time favorite question, Al, and that is, what's your thoughts on how the market is doing? How is it trending? What is going on with this market?
You know what? I appreciate that. And that's a question that comes up every day of the week. I'm sure you get asked it all the time. Is this a good time to buy? Is it a good time to sell? Are rates going to go down? Are rates going to go up? Are we in a bubble? Is the real estate market going to crash? All that. Guys, I got to tell you the truth. And this may sound funny. Turn the darn news off. They're just selling you sensationalism. I've been doing this. I've seen every market under the sun. I went through the 06, 07, major adjustment in our economy, and we are not in that. That was caused, without going into big details, that was caused by something very, very different. Unfortunately, there were products created that would let you buy for zero money down with a 550 credit score, no skin in the game. property prices popped. And of course, when they came down, guess what? Lots of foreclosures. So we're not in that market. So here's what I always advise a buyer. Why do you want to buy? Well, I've got a wife or a husband and kids, or, I want to, build equity. Then you need to buy. If you're able to buy it. Here's why. Because somebody say, well, Al, what if this? Well, first of all, if we look at the trajectory, this is not a get rich quick scheme, right? We look at the trajectory of real estate. It's always been loyal to us, right? It's just, you just gotta be able to play for the long term. And I also tell people, if you're buying a home to plant roots because you want to have a pride of ownership, you want to put a nail in the wall without the landlord telling you what to do, you want to paint your bedroom the color you want to paint, then you need to buy a house, right? I love that freedom that we have. And so you have to understand there's also an emotional response. There's tax benefits. There are equity appreciation. But Al, what if it goes down? Well, guess what? When it goes down, you know what happens? It always goes up. We're not in a crash right now. Number one, I just got a contract in this morning, full price offer, seller sold it in 3 days. I mean, so even though the buyer, by the way, the realtor did a good job following my advice. We got the buyer almost $11,000 in seller closing costs, but it was win-win. The seller got his price. The buyer got help with closing costs. Everybody's happy. I'm seeing that all the time. And the second thing I would say is, Al, what about rates? Well, first of all, again, I'm going to keep it real. 2020, 2021 were not real. If you think that 2.5%, 3% was real, please look at the history. That's not history. History is about 6.25%, right? Higher, lower. So we're actually below that right now. At Best Life Mortgage, we're actually closing loans in the 4% range, right? So we are, again, for those who don't know, there's banks and credit unions, there's retail lenders, and there's brokers. Brokers were lighter, have a varied menu program. We get wholesale rates. And so I'm not saying we have money at half off, but we have very, very, very competitive rates, right? So for those thinking that you've got to buy today and get a 7 or 8% rate, that's not the case. You could probably get something, in the 4s. If you've got a little bit lower score, maybe it might be in the low 5s. What a great time to buy. Al, what if I buy and I'm stuck with this 5% rate? Well, first of all, I think being stuck with a 5% rate is better than renting for the rest of your life. So that's number one. But number two, here's what happens. Rates go in cycles. Interest rates go in cycles. Everything's a cycle if you pay attention. So if you were to buy today, now I don't think rates are going to go to 3% in 2 or 3 years, but let's say that you had that optimism. Refinance. We'll refinance you. So your 30-year loan, if you feel the rate's a little high, you're not stuck with that for 30 years. You're stuck with it until the next cycle, which might be 2 years from now, 4 years from now. It's always happened. It always will. Nothing changed. So my summation is, don't be afraid. Don't get sensationalized by all these bad news, right? It's no fun to report good news, on CNN and Fox and all these, they've got to sensationalize it, right? They got to keep our attention. So protect your spirit from that, number one. And number two, ask questions. Don't let some journalist who really doesn't know about real estate, call Nicole or call me. Let's find out. Let's get a pulse of the marketplace and see what's happening. That's my insight on that. I don't fear these markets. I'm realistic that we've had a price increase. I'm not blind to that. And we have lost buyers at the lower part of the sales price range that can't buy today. I would tell you, get buyer ready. Do what you can, increase your income, to decrease your debt, to increase your savings, to increase your credit report. Get yourself buyer ready. So then when you have the opportunity, you can buy, whether that's now, 3 months, 6 months, etc.
I like that term, Al, on getting buyer ready. That's a segue into our final question.
Oh, good.
and that is, give us some pointers, Al, on what that looks like, being buyer ready, preparing to purchase. Yes. Absolutely.
So first of all, let me dispel a couple of myths. You don't need 20% down to buy a house. I still find that people say, well, Al, I'd love to buy, but I don't have 20% down. I don't know if I will. Well, that you're like listening to some old news, because that was many years ago. We haven't been in a 20% down market. Now, could you put 20% down? Sure. If you sold a house and you're equity rich, put whatever you want. Most people, especially first-time buyers, that's very, so understand that our market knows that. So number one is you can buy with, in some programs, 0 money down, some 3% down, some 3.5% down. And we'll talk about some creativity on how to access those funds right now. But that's myth number one. Myth number two, and then I'll go into how to get buyer ready, is you don't need perfect credit. Now, let's keep it real. If you were the bank and I was borrowing money from you, you would probably want to have some semblance of security that I'm going to pay you back, right? So I mean, let's use a little common sense without knowing the business. So you don't need an 800 credit score. You don't even need a 720. But do what you can to be responsible with your debt, right? Don't go buy a house and say I can't pay more than $1,000 a month, but you've got two $800 a month car payments, right? Let's put ourselves in a position where we can serve you, right? Now, having said to get buyer ready, make sure that you pull a credit report on yourself. There's a couple of companies that offer that for free. Nicole, if anyone contacts you and mentions your name, I will give them a free complimentary soft pull credit report. Doesn't hurt their credit. You may be months from buying, but if you complete the information at my link, I'll provide you a complimentary report and give you a little evaluation on that. So number one is be aware of where your credit is, right? Don't think you're at 650 when maybe you're at 540, right? So it's a big difference. So number one, and then work on what you need to do. For example, if you have collection accounts, I wouldn't pay them off right away. I would negotiate with the creditor, call up ABC Collection, say, listen, I know I wasn't able to pay you, but I'm ready to pay you now. If you can do a negotiation in that, do it. But here's the biggest negotiation you have to do. You have to get them to agree in writing that they're going to delete that. So, hey, listen, I'll send you the $1,200. You don't want to discount it, but okay. But I need a deletion letter, and I need it, that you to send me before it, and then I'll send you $1,200 within the next 24 hours. So you want to make sure your credit's up to you there. You're reviewing your credit. You want to keep your credit card balances to no more than 30%, because when they're over 30% of the high credit limit, then your credit it starts getting damaged. I talked to a gentleman about a week and a half ago, had about 6-7 credit cards, never missed a payment. Unfortunately, on most of them, he was over his credit limit, so his credit score was very low, right? And and he couldn't understand it because I've never missed a payment. I said, well, the problem is, these algorithms are looking at you're a high risk, right? You're actually paying on time, but you're not managing your credit because and I don't remember what his line of credit were, but let's say it's $2,500, you owe $3,200. You can't be over that, And so that's the next thing. The next thing is your job. Do you have stability? Again, look at yourself as the bank for a minute. Have you been working with verifiable income the last 2 years on W-2, right? Have you changed from, cook, bottle washer to attorney to construction worker in the last few years? A lender's going to look at that, right? So you want to make sure you've got at least a good 2-year track record. Now, if you're self-employed, we don't need to worry about pay stubs and W-2s. Then I want to make sure you are putting that money somewhere. You might say, Al, I own a restaurant. We're a cash business. Wonderful. You've got a couple of choices. One of them is probably not your tax return. So the other one is, I've got 3 choices. Probably a CPA letter we can do that with. Bank statements if you're putting the money there. Now you might say, Al, I'm a cash business. I don't put in the bank statements and I don't have a CPA, right? Whatever. Now you're challenging me, but believe it or not, we have loan products for that. Bigger down payments because it's a bigger risk. But if you're willing to, to do the down payment, will help you. What else should we be looking at is you don't have to calculate your debt to income ratio, but just kind of think that about 1/3 of your housing payment is your income, right? And that's not exact rocket science because it takes a lot of things into consideration. But, about 30% of it should be your housing payment. And so if you're making $6,000 a month, let's say you're a married couple making $6,000, about $2,000 a month would be the mortgage payment. So you need to reach out to Nicole or myself and say, hey, here's what I make, here's what I do. And this is what we want to do, guys, by the way. We want to get you a buyer ready. Doesn't mean you have to buy a house today. It means taking that first step of being educated and informed. Now, you're probably very educated in what you do for a living, the way you run your life. We're talking about educating and informed for specifically getting buyer ready. And then the worst thing that can happen is I have to tell you, listen, Mr. Jones, Mrs. Jones, I can't fund your loan. You can't go out and make an offer this weekend. Now, you maybe think I'm a bad guy, but I just saved you a whole lot of heartache, right? I don't want to get your hopes up. But here's what I will do, and I promise this. I'll give you an action plan. You will know exactly what you need to do. If you're deficient today in any area, you will know exactly what to do. Nicole will know what needs to be done, and let's get you there, right? So you may have a little bit of homework, if you will, to do 2 or 3 things, but guys, that's okay. That's part of being buyer ready. That's part of, putting yourself in the best position. Now, when you do that, you're going to get the best terms. You're going to get the best chance at rates. You're going to get the best structure. You're going to get the smoothest sale, right? Sale. So it really behooves you to do that for a myriad of reasons. And so, Nicole, if you left anything out, but I think that's what comes to mind when getting people buyer ready.
I think that's fantastic. You've shared some valuable information there. Quite a bit of which questions I received as I'm taking on a new buyer and we're getting them prepared, buyer ready, for the purchase. One question that I do get, Al, pretty frequently is, I looked at my credit score through Credit Karma.
Well, that's okay for entertainment purposes, right?
So, and I tried to explain the difference between that and versus Experian or TransUnion or Equifax. Do you have a little bit more insight that you can share on the difference between the two?
Yeah, absolutely. Credit Karma is not a credit repository. So their information is subject to inaccuracy. In fact, those of us in the business, and the reason you bring it up, Nicole, is because we know it's not very accurate. No, there's no lender, bank, credit union in the world that's going to consider that credit report. So don't be surprised. Say, hey, well, it says I got 698. What do you mean I got 601? Well, it's because you're relying on something that's not a repository. The other three you mentioned, those are the ones that we use, right? So in a mortgage credit report, we use the middle score of the three, and that's it. No Credit Karmas even in the pictures. Not even they're not even in minor leagues when it comes to this, right? When I run the soft pull credit report, we just run a one bureau because we just want to give you an idea. We're not going to hit your credit. You're not going to do anything. It's not going to. And so, but yeah, Credit Karma, don't ever rely on that. I mean, if you have an account and you just kind of want to use it, just understand that there's really no accuracy. I'd rather go to a place and get a credit report or reach out to us, right? Because Credit Karma is not reliable. And I think, Nicole, the reason you brought it up, not only is it a great point to bring up, but we don't want to see people disappointed, right? I mean, yes, we want to do loans and we want to sell homes, but we want it to be a good process, a strong process for you, one where you're going to maybe be a little nervous, but going to be very happy. And don't set yourself up for disappointment by going to places like Credit Karma.
Fantastic. Well, thank you so much for that. Again, lots of great information. Al, I appreciate you joining, and viewers appreciate you chiming in. Let's see if we have any questions, Al, and after we address a couple other questions, we'll go ahead and wrap up. I know you're a very busy man, so don't want to take up too much of your time. But one question came in saying, do you work with clients who need help fixing their credit? I think that we kind of covered that a little bit earlier. But if you want to reiterate, they do want to find out if you work with clients that need the help fixing their credit.
Yeah, absolutely. So if it's something, and we're a lender, even though I understand credit, we're not a credit restoration company. But if I see something that is very easily fixable, it's an error, or can be solved through a little bit of negotiation or something, then yes, I'll definitely help you. The next thing is, if it's a little bit more of a serious credit issue, then you're better served by going to my right-hand person who's a credit specialist. This is what she does every day, all day. In fact, she doesn't do mortgage loans. She's a credit specialist. And so it'd be one of those two, but both come through me. I'll advise and counsel you. I'm happy to do that. I'm happy to give you the information and to guide you on improving your credit. But if it is more complex, I'll make sure you get to the right person. And by the way, we do monitor that. We don't just, it's not a bless and release. I monitor that with my team. I have a personal team, and we want to make sure that, even if you're not, quote unquote, my client that I finance, I still look at you as my client, as having a sense of responsibility to follow through on that and make sure that you feel that you were, appropriately referred.
Awesome. Fantastic. I'm checking to see if we have any other questions coming through. Great question. Joyce, we appreciate that. Thank you. Let's see. Okay, I'm not seeing anything just yet, Al, but if we get some in the future, I'll circle back around to you and get your input on any additional questions that comes through. Let's see. Okay, so Al, I need you to do me a favor. I need you to share the best contact. If someone wanted to get a hold of you, how would they do that?
Very easy. It's one link. It's my virtual e-card, and it is coachalrod.com. Just Coach, like the sports player, right? Or sports trainer. Coach Alrod, ALROD, abbreviation of my name.com. You'll know you're on the right place because it's got my picture there, but you'll have my phone number, my email. And even if you want to apply and just kind of explore financing, even if you're not under contract with Nicole yet, but just want to explore it, the link is there as well. So that's the easiest place to have all my contact information. I'm also on Facebook. If you want to look me up, Al Rodriguez. I'm an open book.
Al Rodriguez. I'm getting you here in the comments, so if they need a reference point, it'll be there. Okay,
Absolutely.
perfect. All right. Well, again, thanks again. Until next time, I want everyone to have a blessed week. Thank you, Al. Thank you, viewers. And don't forget to subscribe to the channel for future great updates and insights. Take care, everyone.
Thank you, Nicole. Thank you, everybody. Take care.
Thank you.